Indicators versus price action. For newbies, it might still be confusing to them, but in this video, I will get to answer the question on which is the best and should you combine both of them for best results. So let's start by definition. Indicators. These are mathematical calculations plotted on a price chart based on historic data like volume, price, and time. We have examples of Bollinger Bands, relative strength index, that is RSI, and MACD. There are many of them. You can find them on TradingView, some are on MT4. These are just, we can call them like helpers. You just add them to your chart and they will help you interpret the charts. That's it. Price action. This is the study of raw price movement on a chart. Mark my words, raw price movement, raw. This means there are no indicators. You are just reading the price or the chart as it is. You can read the price by interpreting candlesticks. You can read the price by checking patterns, identifying patterns. We have head and shoulder. You can also read the price charts by just looking for key levels, and by doing so, you are able to understand what the market is telling you. So let's find a comparison between indicators and price action. Indicators are lagging. This means they delay in giving the signal because price must first come out so that now they can do the mathematical calculation and then interpret it so that they can display. So they lag in time. But for price action, whatever is happening immediately, you are able to read it and interpret. Number two, they are simple to use because you are just displaying them on the charts, and you know for this particular indicator, it's telling you this. For this one, it's telling you this. But for price action, you require more skill and experience because you are just reading the raw data. Whatever information is displayed on the charts, you are able to look for it and find it and interpret it. So it's a bit tricky. Number three, for indicators, they may cause analysis paralysis. This is when you display a lot of indicators. Some will show this, some will show this. The price is also telling something else. And so you might get confused. But for price action, traders get a feel of the market and also in a sentimental way. Because you are actively, I can say like you are actively participating in the market by looking for those patterns, for the candlesticks. You're not just relying on indicators. So which is the best? For me, I would go for price action. I have done indicators and I had to move and shift to price action because you want something that is timely. First of all, you need something that can interpret price immediately. You don't want any kind of delays. Should you combine both of them for better results? I would not recommend this. I would rather stick to one so that you can have